Hello and good afternoon. This is our earnings call provided to you by Little Stark Industries, presented by me, Mariam Almanza. But this presentation is a collective work by Tiffany Johnson, Emmy Stromer, and Yuhei Wu. We as a team came together and provided you all with some information, some data, some metrics, and some of our future action plans that we're going to have for the sake of our company. But I hope you learn something about our Little Stark Industries and that you have some questions and some feedback that we would love to take in and consider for future decision making. So for strategy and investor expectations, Little Stark Industries has a differentiation strategy. This means that we are creating superior customer value compared to our competitors, and in return, our company can charge a higher price. This strategy was chosen at the beginning of the practice rounds, and we believe that this has helped us achieve some sort of competitive advantage during our practice rounds and then at the beginning of the actual rounds. We had a little bit of a fallback in between these past couple of rounds and the previous one that we just ran. And we still believe that this is our best go-to strategy because we want to differentiate ourselves from our competitors, but also create that competitive advantage as well as create a good product that customers would want. Again, because we want to create that customer satisfaction as well as create a good company culture. And so that's what we're working with for our differentiation strategy. And we hope that this strategy is continued throughout our decision-making process, and we believe that this is going to get us further in our rounds. Since Little Stark Industries focuses on its customer value, this would mean that we focus on these metrics: product design, which is a physical value, marketing, which is a perceived value, and corporate citizenship, which is another perceived value. So here you can see that our EPS, ROE, stock price gains, and credit rating and image rating scores. The round 10, we didn't meet, year 10, we didn't meet that EPS investor expectation. We were just a little bit below what that investor expectation was. And same thing with the ROE expectation and the same thing with stock price gains. This was due in part because we're still trying to re-strategize how we wanted to look at the differentiation strategy. And so this was something that we were working on as well as trying to ensure that the company is running well. But because of that, we improved this year 11. So at the end of the slides, you're going to see different metrics that were assigned to us. However, our credit rating has remained pretty subpar. Same thing with our image rating. We always try to ensure that we are creating a high quality product with a good quality price. And so that's why these two, well, especially this one, the image rating, this one is always going to be either at or above expectations. And so we really take pride in that because, again, like I said, we like to provide a great quality product for our customers. Why these performance results? So why were EPS, ROE, and stock prices missed as investor expectations? So EPS bought back stocks later on, which meant that there were more stocks outstanding, allowing our earnings per share to be more spread out. So that was part of why we missed that EPS metric, as well as missed to address exchange rates, which even though we do have those values available to us, we didn't quickly analyze them and put them into our differentiation strategy when we were looking at the different regions. And so once we address this exchange rates dilemma in year 11, we were able to see higher results and we were able to meet and or exceed those expectations. And I believe this was helpful to us. And now we're going to use that into our analysis portion and into our decision-making process. So for ROE, We missed meeting shareholder equity by not meeting shareholders' expectations for equity and not buying back enough stock due to low ending cash. Again, we always have these conversations as a group to ensure that we are making the appropriate decisions and to because we always keep our shareholders, um, you know, and at the top of our what we're thinking about, and so we just needed to analyze the data a little bit more for this one and create better decisions. Same thing with stock prices. We're not managing to maintain market growth from both the drone and camera leaving the company. Will minimal demand to be profitable, but not enough to be anywhere near market leaders. Same thing. We try to be profitable, but we also try to be market leaders, which means that some of that profit has to go into that marketing aspect. So that is just something that we have to keep talking about and making decisions on. Why these performance results for the credit rating and image rating metric. So for the credit rating, higher current ratio than industry average. A current ratio that is higher than the industry average may indicate a lower risk of distress or default. So along with that, we didn't take out any additional loans, which is why our credit rating was where it's at right now. For image rating, both PQ rating for camera and drone are higher than the industry average. We invested 11 million and $10.49 per unit sold into corporate citizenship. With a differentiation strategy, it's important that not only physical value is superior, but also perceived value. With corporate citizenship, we have chosen to improve our impact on society through green initiative, renewable energy program, improved worker conditions, and responsible code of conduct. We provide a higher value compensation package than the industry average to our PTA members. Again, we take pride in this portion of our company because we are not only trying to again be profitable, but we're also trying to do right and create a positive impact for our environment and for our employees. So that social aspect is something that we want to keep improving on and make sure that we are being fair and responsible. That is why at the beginning of the rounds, before we even started those practice rounds during our team charter, we put this on one of our values is to make sure that our values and missions to ensure that we are creating a positive impact socially and environmentally and being responsible with how we manage our company and how our products enter the market and the world. That is more of a sustainable kind of mindset that we have since we're in it for a long term. We want our company to be successful, but also be impactful in a good way and be able to be responsible for our actions as well. So we always have a conversation about this after every round to see if there's any other ways that we can improve our corporate social responsibility and increase that PQ rating for cameras and drones to be higher than the industry average. And we have done that in the previous rounds and it has worked for us and we will continue to do that. So for the year 11 projections, we actually were above investor expectations for both for both EPS and ROE. With our stock price, we were almost there, but I believe that this is pretty good for what we had previously. These numbers are, more than what we had hoped for. We are so happy that we went from red to green now and that we are increasing we are exceeding those investor expectations because this means our company is doing well and we are trying our hardest to again ensure that investors are happy and that we are meeting those requirements. Same thing with credit rating and image rating. Like I said before, we are either always at expectations or exceed. So this time around, we were at expectations. Our image rating continues to, do well and provide positive feedback from others. So again, either way, we will continuously strive to do better. So for our action plan, Little Stark Industries needs to improve our EPS, ROE, and stock price metrics. As long as we maintain our corporate citizenship and refrain from taking out a new loan, we will meet investor expectations for image and credit rating. To improve EPS, Little Stark Industries, or LSI, is going to buy back 1.3 million shares of stock. This will decrease the number of stocks available, resulting in earnings being more spread out over fewer stocks. In addition, to bring in more revenue, price of our drone is going to increase by 26% in every region. Since we are running a differentiation strategy, that means with superior customer value, a higher price can be charged. The average price of drones in year 10 was around 1.7K, so increasing that will differentiate LSI. With a higher price, there also has to be superior customer value. So in year 11, included accessories will increase from $15 to $18. In addition, consumers tend to believe that the higher the price, the better quality it will be. So increasing price will drive consumer perspective to believe this product is superior. Finally, we plan to decrease our marketing in Latin America entirely as the exchange rate impacts revenue by 19.81%. This is what I had mentioned earlier. So that exchange rate, although we weren't looking at it before, we're looking at it now, and we are implementing a sufficient strategy to be able to help those regions gain impactful revenue. We are confident that buying back shares will provide positive returns because in year 9, LSI bought back 1.75 million stocks and witnessed an increase in stock price by $42.01. So with our action plan, we are planning to see higher growths in revenue, ending cash, and overall our profits into our company. This previous round that was just finished, and we got our calculations back on Friday. We saw, again, we jumped from 10th place to, I believe, sixth place, 6th or 7th place, which means that we are doing something right and we are continuously talking about what our company wants to achieve and how we're going to achieve it. Again, we are open to any feedback, any other data metrics that you would all like to see, and we would like for you all to keep in consideration that we are trying our hardest and that we keep talking about how to improve our company, our product design, our marketing. We, again, like I said before, we are hoping to see increases in our marketing, in our market share by, increasing that marketing aspect of our company. Our managers are always are always looking for new ideas and new ways to make our company better. And yeah, this is our EC call. If you have any more questions, please feel free to email us or talk to us in person. We are open to any feedback and we look forward to hearing from you all soon. Thank you so much and have a great day.